Welcome, TradeStation Nation, to today's webinar here on the Get to Know Your Trader segment. Today we have brought in a world champion trader, Kevin Davey of KJ Systems Trading. Kevin was an aerospace engineer and he had an MBA, and he decided to combine it with some solid trading techniques that he has picked up along the way. And he wants to share them with you today as we talk about an introduction to algo trading. My name is Don Prattle. I'm the Director of Trader Development here at TradeStation, and it gives me great pleasure to bring Kevin. Is a world champion trader, and so it gives me great pleasure to have him with us today. His firm offers services in how to create, well, he calls it a strategy factory. I'll let him explain that. But he wants to help us talk about how to develop a terrific strategy, a terrific trading strategy. Now, I know folks have come from all over the world to hear Kevin, and I'm not surprised. We don't often have world champions in our midst. Remember that everything we talk about here in our presentation at TradeStation is for educational purposes only. All the symbols, all the trading ideas, and everything we discuss are for demonstration purposes. They're not recommendations. Now, this presentation is not an offer or a solicitation of any kind in any jurisdiction where a TradeStation affiliate is not authorized to do business. Remember that active trading is not suitable for everyone, and options trading carries a high degree of risk and may not be suitable for you either. I've posted in the chat panel, you may have to scroll to the top of the chat panel to see that, a couple of pieces of disclosure information, particularly the characteristics and risks of standardized options, but another document that details some of the other asset classes that we cover here at TradeStation. Right about now, I usually see the question in the chat panel, are we recording? And the answer is absolutely, we are recording. We record most of our webinars here at TradeStation, and I would urge you to take a look at the TradeStation website in the university area, where you will find our recorded webinars, and this recording should be there sometime early tomorrow. With some of those introductions out of the way, I'm going to let Kevin Davey tell his story and certainly introduce us to algo trading. So Kevin, thanks so much for coming to TradeStation today. This is going to be a very exciting presentation. We've got a nice, healthy, big crowd with a lot of questions for us, I'm sure.
All right, well, thanks, Don, and thanks to everyone for showing up today. I always love doing these TradeStation webinars. I've done quite a few of them. It's kind of like, since I've been using TradeStation for I think 14 years now, it's kind of like coming back to your high school after you graduate and coming back and giving a talk to some of the newer students, which is really kind of neat, because TradeStation is a great tool, and obviously we'll talk about that today, but it's just neat to be here, so thank you. All right, so Don had put up one disclaimer. I'm just going to put up another one of just for you to remember all the results I'm going to be showing, any equity curves, that kind of thing. Treat it as hypothetical. You could trade the exact same system and get different results. So that's what I always warn people whenever they see any kind of results out there. If it didn't happen in your own account, treat it as hypothetical, because it may or may not happen. I mean, I've seen cases where two traders take the same trading signals and get different results. That happens. And also, in that first paragraph, don't trade with money you can't afford to lose. That's a big one. I've seen too many people over the years get caught where they're just trading money that they can't afford to lose, and they start making bad decisions because of it. All right, so again, thanks to TradeStation for having me. And like I said, this is my primary tool that I use every day in trading. And I mainly trade futures, but I do almost all my testing with TradeStation and a lot of automation with them. So It's a great platform. All right, so today I'm going to kind of talk about algo trading. You know, you've probably heard the term, and this is going to kind of be an intro to for a lot of people. I'm going to try to keep it fairly simple, just so you can kind of get exposed to it. It's just a different style of trading than probably a lot of the other things you've seen. And so we'll talk about it, how to get started with it, you know, and then we'll have plenty of time for questions and answers. And then at the very end, I'll do an autographed book giveaway. And it's not a real big book that I wrote a few months ago, but it's last time I checked, which was today, it's the #1 bestseller in the futures area of Amazon. So it's called Introduction to Algo Trading. It probably would take you an hour or two to read. It's just a good way to kind of get into algo trading and to kind of learn about it. And it's really inexpensive too. And actually, if you have Kindle Unlimited, which probably a lot of you do, it's actually free. So if you stay till the end, I'm going to be giving away 2 of the paper copies of it. And no matter where you are, I'll autograph it and I'll mail it out to you. So stick around to the end for that. You just have to answer a question based on what I'm going to be talking about today. All right, so algorithmic trading. You know, it's amazing. I'll tell people I do this for a living, and most people just get scared. You know, they hear the word algo or algorithmic, and they're like, ah, and they just want to run. And that's a pretty common thing. You know, it's a reaction that a lot of people have, especially even traders. You know, because you see things like this. Now, this is from a little over 6 years ago, but this was a big story when it came out, where there was a company, Knight Capital, and they were basically like a market maker, but they had some kind of computer software glitch. I think they were upgrading or, you know, doing something to their code and did something wrong, and before they could stop it, cost them $440 million. And they actually didn't go, I don't think they went out of business, but they had to merge with somebody else or give them a bunch of equity or something. But I mean, this was a real cost, and it was from an algo that was just run amok, I guess is what you could say. It just went crazy. So a lot of people, when they hear algo, they think of these kind of things, and it kind of scares them. You know, and if you don't think about that, you definitely think about high-frequency trading. I mean, everybody's heard about that, right? And these are hedge funds, commodity trading advisors, private parties, whoever, who invest a whole lot, I'm talking millions, in infrastructure. You know, they went as far as putting high-speed lines, running high-speed lines from New York to Chicago, just so they could get in a couple microseconds ahead of everybody else with orders. That's kind of scary. I mean, that kind of scares me. And I don't even want to play in that realm of trying to do things super fast. And if you're a retail trader, I kind of recommend you just stay away from that. You know, don't try to be scalping like crazy for a tick here and tick there, because unless you've spent the money on all the equipment and infrastructure and everything you need, you're probably not going to succeed. You know, a lot of these people will create some computer code and they won't even have it running on a PC, you know, like you and I would run TradeStation. They'll actually burn it onto a chip, and it'll be like a dedicated, you know, single function PC that all it does is it just runs that code, just so they can get a little bit faster. It's crazy. So, you know, HFT's out there. I'm just recommending you stay away from it, and we'll talk about that a little bit later, of ways that you can just avoid them. You know, just don't play that game, and you should be okay. So what's an example of a quote unquote retail trader algo? Here's a real simple one. If close is less than the average close of 5 bars ago, of the last 5 bars, I'm sorry, go long. And if it's greater than the average close of the last 5 bars, go short. So in this particular one, super simple. You're always in, right? You're either long or short. There's no downtime, which hey, may or may not be good. And this one's actually more of a mean reversion, because usually what people think is when the price is above an average, they want to go long. In this case, we're going long if it's below. And you notice the symbol I have here is the mini S&P, and that's one reason, because the mini S&P actually tends to work better with some of these mean reversion. But in any event, that's just a simple algo. And everybody's probably looking at that and like, oh yeah, it's simple. Probably doesn't work. Well, yeah, you're probably right. Or it probably works for certain periods of time and then it kind of disappears. But that's all an algo is. And it's really just another way of saying mechanical trading, systematic trading, rule-based trading. You've probably heard those words over the years. It used to be, people would always call it system trading or systematic trading and mechanical trading. Now it's just really called algo trading. So the way to think about it, an algo is just rules to tell you when to take a trade. Simple as that. And if you just keep that in mind, it becomes a lot less intimidating. It's just some rules, okay? And the neat thing is you can automate that. So you could have a whole bunch of little algos running for you that all did different things, worked on different markets, that kind of thing. And that's probably where the real power comes. So, if you were like I used to be way back when I started, they definitely didn't call it algo trading 25, almost somewhere 26, 27 years ago. I was calculating moving averages by hand and writing them down on a piece of paper with the calculator. But that was really just algo trading, right? And the guys working at the hedge funds, hey, they're doing algo trading too. They're writing stuff that's probably a lot more complicated than what we do as retail traders, but they're writing algos. So there's a wide range, obviously. And again, you can't be intimidated by this. It's just rules to trade by. That's the simple way to think about it. And you run the rules, you look at the backtest results, and then you determine, hey, I want to trade it or I don't. That's where it's real simple version. Obviously, it gets a lot more complicated. But the real keys with this in being successful with algo trading is you can historically backtest them, and the algos are rigidly defined. Once you set up the rules and put them in TradeStation, for example, you get what you get. You're not going to have any discretion. And those turn out to be pretty key rules, or pretty key things to algo trading. So you might say, well, hey, back testing, historically testing, everybody always says past performance is not indicative of future results. So, hey, does that really buy you a lot? Well, hey, it's a good point. And I look at it this way. You can start trading any algo tomorrow, right? You can create one right now and trade it tomorrow. The neat thing about using TradeStation with this is you can go back and you can back test it, and you can see, was it profitable or was it not? Now, where people get hung up is just because it was profitable doesn't mean it's going to keep being profitable. It could fall apart and stop working. It might work 6 months, a year, who knows? It might keep working. But if I have a choice between trading something that I know has worked historically and something that has never worked, I'm always going to choose what has worked. Because at least I have a chance, I believe I have more of a chance. And so that's why you want to back test them. The interesting thing about back testing is after slippage and commission, most systems out there lose money. Most ideas you test, most trading systems, when you factor in real world costs, they lose money. So that's a good reason to backtest too, to see if you're overcoming that real world cost. All right. Chart trading. Probably a lot of you are familiar with this. Is that algo trading? Well, I guess it could be. You know, I look at algo trading as, hey, you define all the rules and then you just follow those rules. Chart traders typically put some discretion on it. You know, they might, like in this example here, they might always follow these pin bar reversals that you see at the top, except if it's an uptrend day, and then they might not. You know, there's a lot of other stuff. Doesn't mean it's good or bad. It's just a different way of doing it. And if you use discretionary entries, if you are watching CNBC during the day, you know, you might make some trades based on that. Well, I'm not saying it's good or bad. It could be both. But it's not pure algo trading. In this case, if you, let's say you had automated exits with it, you're probably half algorithmic, right? You're doing the entries on your own, but then you're automating the exit. So, you know, there's pros and cons to each. So don't get me wrong in thinking that, hey, algo trading is the only way to do it. That's not true. There's people out there who use chart trading, who use discretion, and probably do just fine. But I'm just saying there's definite, and we'll talk about this, there's definite benefits to doing algo trading and following that kind of approach. Okay, so what are some of those advantages? Well, like I said, you can test it. You don't have to rely on some, what I have in quotes, guru, because there's tons of people out there who claim that they make money every minute of every day. You know, and if you don't believe me, just go to Twitter sometimes, and my goodness, I look at that sometimes and I'm like, how can these people make money like this all the time? Well, the fact is they probably don't. But the point is, you don't have to rely on what they're saying. You can go and test it yourself. You know, most books that you can get, most trading books, you read about systems in those and you go and test them, you'll find out a lot of them don't work. Maybe they worked at one point, but it's always nice to test and verify things yourself. So that's a huge advantage that you have. You don't have to rely on somebody just having an internet site that says, hey, you know, when the MACD is doing this, that's the time to buy. I love those kind of articles. Because they never show proof. They just tell you that's what you should do. So putting it into an algo lets you test it for yourself. And then, as I mentioned earlier, once you do that, you can do a whole bunch of strategies. You can create a whole bunch of them. You can automate them, and then all of a sudden you can take advantage of diversification. So what's that? Well, hey, instead of trading just a gold strategy, trade a gold strategy, and then maybe you have a different strategy for trading crude oil, and one for the euro currency, and one for soybeans. You can create a whole bunch of different strategies. So for example, I have 82 strategies right now that are ready to be traded. Now, I'm not necessarily trading them all because some of them are correlated with each other, but in general, those are all potential candidates. And so I trade a whole bunch of them. And so like today, let's see, today I think I might have been long crude oil, but I was short unleaded gas. And what happens is those kind of balance each other out. And over the long run, you get a smoother equity curve. It's kind of neat. And, you know, I'm not saying diversification is any new concept. You can go back to what the 1950s or 60s when that first came out. And the guy who developed it won a Nobel Prize for it. So he was talking about stocks, but you can definitely do it with futures too, especially with the wide range of futures you have. And the other big advantage with algos is you can have confidence in your strategy because you know it performed in the past. Like I said, there's no guarantee it's going to keep going, but all things being equal, it's nice to know that you're trading something that has worked before. You know, could stop, but that's always a nice feeling. It helps you trade it. All right, well, it wouldn't be fair to just give advantages. So what are some of the disadvantages of this? And I actually listed more than the advantages on purpose because if you're thinking about doing algo trading, I want everybody to really think about it and think about the pros and cons. Because I think too many people get into any style of trading or any particular strategy or anything, and they just tend to jump into it without thinking first. So that's kind of why I put more disadvantages. I mean, it's really easy to develop a strategy the wrong way, you know, to overfit, to have too many parameters. You know, my story I tell a lot is there was some guy I was talking to who sent me his performance report that he was really proud of, and he had, and it looked good, just, you know, the net profit. I was like, yeah, it looks pretty good. And he had like 50 trades. And I thought, well, if he has one or two variables that he optimized to get there, that might be okay. It turned out he had 47 variables that he optimized to get those 50 trades. So in effect, he was almost perfectly curve fitting. You know, he almost had like a different parameter for every trade. And it's crazy. That's a good example of developing strategies the wrong way. And again, I mentioned that just because it's worked in the past doesn't mean it's going to work in the future. And then most people can't resist what I call tweaking. Can't resist changing their strategy. And I see this all the time with people I work with where they see something and, oh, the market did this today, so I'm going to put a rule in to prevent that, you know. And they'll come up with all kinds of rules to filter out the bad trades. And that's just totally bad practice. You don't want to do that. You want to keep things simple. The simpler you keep them, the more likely they're going to keep going. You know, the tighter you make it, the more conditions you put on it, the tougher it's going to be for it to work. You know, one way to think about that, let's just say you were looking for a job, a full-time job somewhere. You know, if you said, hey, I just want a full-time job no matter what, you're going to have a lot of opportunity and you probably will find something. Will it be your perfect job? No, but you'll get it. But let's say you have a job where you're looking for a job that you only have to work 30 hours a week. You get every Friday off. There's no lifting involved. You don't have to use a computer. You can come and go. There's no set hours. You can come and go when you please. And you have all this list of things that you want. It's going to be pretty hard to find something that matches all that. It's the same way with trading strategies, where if you keep putting all these rules on it, man, it's going to be hard. And going forward, it's not going to work. Another disadvantage, most people override their strategy. They'll have their strategy and they'll say they're going to follow it, and then for some reason they'll turn it off and they'll get scared. I like to tell a story about, there was a person who I met who was going to start trading, and before he went live, he wanted me to just to look at his system. I think he was trying to get me to invest, but he never said that. But anyways, I talked to him after the end of his first week live, and he started out with a $5,000 account. And at the end of the week, I said, "Well, how'd you do?" And he said, "Well, I made $500." I'm like, "Hey, that's great. 10% in a week, that's pretty good." And he sounded depressed. I said, "But you don't sound too happy about that." He said, "Well, I should have made $2,500, but I was overriding my strategy. I decided not to take a couple trades because I was scared because of some news announcements that were coming up, blah, blah, blah." He couldn't get out of his own way. And that ended up costing him quite a bit of money. And my guess is he eventually stopped trading that system because he just couldn't do it. So just remember, if you try to algo trade, you really have to follow the rules. And if you can't do that, and if you're going to tinker, override, and do all those things, it's almost better not even to start it because you're just going to get frustrated. And the last point's a big one. A lot of people think it's, hey, set and forget, and don't worry about it. You can come back at the end of the Sunday night, turn it on, Friday afternoon, come back and see how much money you made, and everything will be fine. It's not how the way it works. And that's even if you're a big hedge fund, they have people monitoring their systems all the time. There really is no such thing as set and forget when you're talking about automated systems. Now, this used to be really prevalent, I want to say about 5 years ago, with Forex robots. That was the big thing. And these expert advisors where they said, "Hey, you just run it and you don't even have to worry about it." I think that's crazy because you're going to have problems. You're going to have disconnects. You're going to have bad ticks come through. You're going to have to roll over contracts if you're trading futures. There's a lot of things that you got to keep on track and keep on top of. And if you don't, they're going to come back and bite you. So don't think it's all just, hey, you set up an algo, you let it run, and you come back to count the money, because that's definitely not how it works. Okay, so the big question, can retail traders like you and me successfully algo trade? I'll just use myself as an example. So I'm a full-time trader right now. I was able to make that leap 10 years ago now. So I was a part-time trader, and that's the other 15 years of my trading experience, or 15 plus years. I was able to finish first or second place in a worldwide futures contest. It was the same contest that years before Larry Williams won. 3 years in a row, I had over 100% annual return. And that was real money. It was a year-long contest. And that was with what they called at the time mechanical systems. They didn't call them algos back then. But I was able to succeed with that. So I was able to get to the point where I thought, hey, I can do this full time. And that's what I do now. So, and by the way, if you ever are on the TradeStation forum, you'll see me posting once in a while as Kevin K-Dog. So I've had success with it. I know a lot of other people have had success too. So the answer is, yeah, you can be successful. But it's not easy. Trading is not easy. And don't let anybody tell you that it is easy, because either they're trying to sell you something or they're lying. And usually both. But retail traders can survive in this trading world, and algo traders can definitely survive. There's just things you got to account for. So I'll give you some things to think about in your own trading. This is a tough one because, like I said, you back test and you rely on the past to tell you what might happen, but at the same time, you can't live in the past. The turtle method's a good example where you probably all heard the story of the turtles and how they succeeded, and a lot of them are still running funds right now. But the thing is, if you go back and try to program that in, and you'll see the turtle method has kind of fallen off in the last few years. And I have a equity curve showing another one, another historic, very well-known trading system that did great up until, in this case, like trade 400, and then it kind of just went flat. That happens a lot. So some of these legendary strategies don't work anymore, or don't work as well. And that could be people who start trading it, who find out about it, and then everybody starts trading it, and then that takes away the edge. For every dollar it's won, there's a dollar it's lost. And it could be that the markets have just gotten faster, and so some of these things don't work. Could be a lot of reasons, but the point is, don't expect just to go and research some old methods and just plug them in and they'll still work, because they might not. Don't rely on public info. Everything that's public, people might trade. And I have this picture, this drawing of eyeballs in the background. People are looking at everything. But that doesn't mean you can't use them for ideas. A lot of my ideas come from stuff that's already out there. So it might be something I see in a magazine or a book, and then I take and I kind of modify it and kind of change it around a little bit and kind of make it my own. Now, does that mean it's unique? Well, there could be other people doing almost the same thing. But the point is, I try to do something different with it. I try not to just take something exact, because the more popular, the more popular something is out there, the less likely it is to last. And that's a good way to really think about it. All right. The third thing, competition is fierce. And it's just getting worse and worse every day as, there's more. Obviously, TradeStation's still a huge player in this kind of marketplace. There's definitely other ones out there. There's other software products. There's a ton of different ways to test and automate systems. And there's a lot more people doing it. And so what ends up happening, it just becomes saturated with so many people getting in it that it makes it tougher. And so you got to realize that it's not easy going. So you got to be dedicated. If you don't love developing strategies and having this little trading business, even if you're doing it part-time, it's still business. You really shouldn't be doing it. I still develop systems. I've been developing strategies for probably 20 years at least of my trading career, and I'm still developing strategies. I'm constantly trying to improve. And I used to be in aerospace, and there was something that was called continuous improvement, where it's just a cycle of how you do things. You always try to do things better and to improve. You try not to rest on what you've done. Because I can guarantee you, even if you're having success today, there's a lot of other people who are gunning for you. They're maybe not you in particular, but they're looking to improve their trading. And it just raises the bar for all of us. So You really got to be dedicated to do this. All right, and then one more is you got to avoid the sharks out there, and I'm calling the high frequency firms sharks. Where if you're a retail scalper, that's what's going to happen to you. You're going to get eaten. You know, if you're going for a tick or two here or there, I'm not saying it's impossible, but it's really hard to be consistently profitable doing that kind of thing. And I know there's people out there who say they are. I've personally never met somebody who I could verify was. I've heard plenty of people tell me they were, but you know, who knows? But the point is, if you're making 100 trades a day, trying to scalp out a little bit, you're going to be paying a lot in trading costs. And you're competing against these high frequency firms, and usually they can do things a lot faster and a lot cheaper than you can. So yeah, maybe you can survive, but maybe they just take all your profit. So you got to watch out for that. And then the final thing is simple does work. This is a strategy I share with people I work with. I've been trading this not since 2012, but that's when my development stopped, right where you see that green. And so all of that in the green area has been live performance. And it's done pretty well, but it's far from perfect. I mean, you know, you have these long flat periods and then little periods where it just rapidly goes up. But over time, it's been a pretty good strategy. You know, so in this particular case, what we have about 6 years or so, and it's averaged about maybe roughly $10,000 per year per contract. That's not bad. Actually, it's pretty good. But it comes in spurts. And, you know, you start trading it, for example, if you can see my pointer, right at trade 400. In this case, you had to go more than 100 trades before you really hit a significant new equity high. And a lot of people can't do that. So that kind of goes back to the dedication. You got to be dedicated, and you know, you've just got to stick to it. Okay. So how to get started? You got to decide if it's right for you. You know, that's the first step. And it's not for everybody. You like programming? Let's say you use easy language. Can you do it? Do you like doing it? Two different questions. Do you like testing? Some people hate testing. Some people love it. And then, let's say you get by those two. Yeah, I love programming. I love testing and developing. A lot of people really get a rush out of it. The next question becomes, do you like the computer doing all the trading for you? And a lot of people think on some level that that's okay, but when it comes down to it, they're like the person I told you about earlier who kept overruling his system. They can't let go. And that's a tough one. And if you can't do it, if you can't let go and you can't let the computer do its rules as it should, you're in trouble and you're not going to survive. So that's the first thing you got to do. You got to decide if it's right for you. I also have in case you're interested, I'll show you my website, or my website's down at the bottom. I have a short 5 or 6 question quiz you can take, and it will kind of show you if you're ready for algo trading. So you might want to do that. Let's say you are. Let's say, yep, algo trading, I can do it. Well, then you want to get a trading platform. You know, there's all sorts of things. You can start from scratch and use a language like C++ or Python or R or BASIC, I guess. I used to do some programming in BASIC way back when. You can do that and create your own backtest engine, create your own charting, and do all that. I think that's a lot of the work's been done already. And so what you want to get is a retail platform. Something like TradeStation, right? Because they're easy to learn, they're easy to use, they have a big user base, so you can trust that people have looked for a lot of the bugs. Not to say that they're all bug-free, but a lot of the bugs have been worked out because a lot of other people have been using it. And the other neat thing is if you find like-minded traders, you can always share strategies. You know, because trading is a pretty lonely, especially retail trading, a very lonely business. You spend a lot of your time just doing things on your own. So there's definite pros to getting some retail software. And of course, I recommend TradeStation because that's what I use, and I've never seen a reason to really change. It's not perfect, but it's pretty good. Then you got to learn the platform itself. You got to learn how to program. Yeah, the easy language is just that. It's pretty easy, but you got to learn it. And then you got to learn how to develop strategies correctly and test correctly. That's where a lot of people get hung up. And unfortunately, a lot of people think this is how you test. You take all your parameters, you know, you do thousands or millions of iterations with all your historical data. You throw them in the platform and you optimize it. You get the best parameters, you start trading. So if you take away nothing else from today, just remember that. That is usually a wrong way to do things. It's the easy way, and it gives you great results because you'll have optimized results, but it's not a good way to do it. So I actually use an approach I call Strategy Factory. Don mentioned that earlier. It was really something I created to get out of my own way to prevent all the mistakes I was making. And it basically is a step-by-step process where I go from goals to a full-size real money traded system. And you do some testing, but you do it in a manner that's pretty methodical and pretty easy to implement once you do it, and it keeps you from making some of the big mistakes. So that's what I use, and that's what I teach. So to wrap it up, and then we'll get on to questions. Algos don't have to be scary. As a retail trader, you can definitely do it. If you think it's for you, the first things you got to do, learn a platform and learn how to program in it. Start developing some little strategies. And then learn some best practices for actually creating strategies. You know, learn what you got to do to avoid overfitting and too many variables and that kind of thing. And then you'll kind of be on the right path. All right, so real quickly, if you want more information about me or a lot of other free stuff, just go to my website, kjtradingsystems.com. I have over 30 hours of videos, all kinds of videos. I have that Algo quiz. I have a trader toolkit, which is got all sorts of articles over the years that I've written for Futures Magazine and also Active Trader when it was still around. You can read about my 2 algo trading books. And you can also learn about my workshop in case that is something of interest to you. So with that, what I'll do first is I'll go through all the questions. I'll just start at the top and kind of work us down. And then that'll be about 10 minutes or so. In the last couple minutes, we'll do the book giveaway. So if you have some questions, type them in, and I'll try to get to them. And if I don't answer your question, it's not because I'm ignoring you. It's probably because I just am scrolling through it quickly to try to get them. You can always email me, kdavey@kjtradingsystems.com. I'll be glad to answer whatever your question is. Morgan's asking, is HFT almost like insider trading? Yeah, you could kind of think of it like that. They claim it isn't, but there are ways that these high-frequency firms can manipulate orders. There was, and I don't know if it's still around, but there was a time where they would get notifications of order fills a split second before the price was posted, you know, that everybody could see, and they could use that as kind of inside info. So there's a lot of little things that they can do. So my recommendation is to just stay away from the high frequency in and out type thing. Go longer term. I do most of my trading is like swing trading, which is, you know, 1 to 5 day trades, and then I don't trade as much. Of course, the downside to that is sometimes you get whipped around, so it's not perfect. Lewis is asking, I'm using Algo Trading Monument Company, or Colorado, I don't know. Find way to automate calculations. You really just have to get a platform that you can put all your calculations in, and it should be just fine. Zach, a while ago, asked if we were going to do more advanced concepts. No, I definitely, if you go to my website, I do have some more advanced stuff. This was kind of an intro to algo trading, so kind of keep it simple. Other than the big, Larry's asking, other than the big boys, are many people able to successfully use machine learning or artificial intelligence? I know that's like a big buzzword as far as, you know, everybody's talking about it. I haven't seen a lot of people have success with it. I think it's like any other type of trading where it's real easy to screw it up. So like, say you use genetic algorithms. Well, they've been talking about genetic algorithms for 20 years, or neural nets and that kind of thing. And it's real easy to overfit and curve fit. So you got to be careful with those things. Okay, let's see. Michael is asking about algo trading for options. I don't do that. You can probably look at the TradeStation library out there and see anybody who does that, but I don't trade options for the most part. Harry's asking, in my book, I describe my process, which I kind of mentioned. How much of that is automated? Most of what I do isn't automated. It could be, but I specifically don't do it for a reason. It's real dangerous to automate too much of what you're doing when you try to develop systems and strategies, because you can run into the risk of just letting the computer do everything and not using any kind of human judgment to say, hey, a strategy is good or it isn't. So you got to be careful with that. And actually what I teach people is, hey, you want to do it by yourself until you understand it. So something like, let's say, walk forward analysis, you want to do that by hand at first before you ever have software do it, because you want to have the understanding. Then once you have the understanding, then you can look to automate it. That's the way I would look at it. Okay, Gypsy said, what programming languages are required to create an algo? If you're using TradeStation, you know, it comes with easy language, so that's what I would use. Ricardo is, no, that's not a question. It was, okay, Harry's got another question. For each strategy, do you test one symbol at a time? Do you use Portfolio Maestro for a list? Do you use the walk forward in Optimizer in TradeStation? So for each strategy, do you test one symbol at a time? Generally, yes. That's how I look at it. Do I use Portfolio Maestro? No, I don't. And do I use the walk forward optimizer in TradeStation? No, I don't. So I do things a little bit differently than some of the tools of TradeStation. And that's not necessarily saying anything about those tools. It's like with Portfolio Maestro, for example, and the walk forward, I was doing similar things before that those functions became available in TradeStation. So I've just kind of stuck with what I've been using for a long time. Okay, let's see. We've got, so there's a lot of good questions here. Harry's got another question. Harry's got a lot of questions. So that's great. What do I think of the new OOEL, object-oriented easy language, compared to classical? And then he said, anyways, that's the last question from him. Good questions. I don't use the object-oriented easy language too much. I've used it a little bit for a couple things, but the biggest thing is the back testing, and I want to be able to back test. And easy language is still the way to really do that. Now, the object-oriented, the new angled language in TradeStation is a lot more complicated, but it can do a lot more. As far as like real-time order placement and monitoring, it's really pretty powerful. One of the TradeStation engineers is always, every time I talk to him on the phone, he's always, hey, why don't you start doing more of this OOEL stuff? So maybe eventually I'll eventually do it. Gypsy saying he uses NinjaTrader. Is this only geared towards TradeStation? No, I mean, you know, the basic things I talked about here can be done with any retail platform. Obviously, I'm talking about TradeStation, not only because they're the sponsor today, but it's because that's what I use. And that's what most of the people I work with use too. And you can trust me that I would not advocate using something that I didn't personally have faith in and use. And I've been there since 2004, so and I probably will be here for a while longer. So I definitely like TradeStation. Okay, and let's just keep going. How do you calculate the break-even trading frequency? I think that was probably in reference to the question where I was saying if you're scalping, you're going to have to trade a lot to scalp, but you're going to have a lot of commissions. And you can look at that, how many times a day you're going to be trading. You can figure out what you got to make just to break even. Morgan mentions adapt rather than just adopt. And I think that was in reference to me talking about taking a system that you find out there and just modifying it rather than coming up with something from scratch. And that's a good example of that. Okay. And a couple people are mentioned, somebody by the name of Luca Giusti. I hope I said his name right. I met him a couple years ago in New York. I think he's doing a TradeStation webinar in a few days. He's a great guy, so if you get a chance to listen to him, you should. Question from Shalom: how do you calculate long-term profit and loss expectation? I use walk forward. I take the walk forward results. It's all out of sample, and that gives me, you know, the average profit per month that I should make with that strategy, and that's kind of what I use. Yeah, and Luca's actually presenting on August 29th, so in a couple weeks. Larry's got a question. Is it possible to put artificial intelligence into a strategy? And that, I'm sure you could do something. I've never personally done it, but that's probably a good question for asking on the TradeStation forum, because then you could get some other users to participate. I don't personally do that, but what are my thoughts about Portfolio Maestro? I just mentioned I never use it. I just haven't used it. I do most of my portfolio analysis just in Excel. And a lot of that's just a comfort level for me because I've been doing it for so long. Okay, a couple more questions and then we'll go to the book giveaway. George is asking about drawdown per future. You get your risk off first and let the remaining position play out. Normally when I trade, when I test with one contract, so I don't do that kind of thing. And there really is no max drawdown requirement. I have some different criteria. It's really based on the profit. and the drawdown. So you got to look at them both. What percentage winning trades is the goal to shoot for? Barry's asking that, and my answer is I don't care. I have some systems that literally win about 20% of the time. And you might say, oh my gosh. Well, yeah, if you're trading one system, it would be almost impossible to trade a 20%er because you'd lose 5, 6, 7, 8 times in a row and you'd get disgusted with it. But if you're trading it in a portfolio of systems, you don't look at individual winning and losing trades. You look at overall profit. So I can handle a system in a portfolio that catches huge trends maybe once a year. And the rest of the year, it just kind of loses trade after trade. So that's kind of the way I look at it. Joshua is saying I like to use TradeStation for back testing, but I don't use Portfolio Meister. It doesn't make sense. I'm not sure how to answer that other than I do the back testing in TradeStation. I get the results, get the performance reports, and then what I will do is I'll put those performance reports together in Excel and create equity curves that way. So I have a lot of automated tools in Excel that I've created over the years. So I don't use Portfolio Maestro. So hopefully that kind of explains it. It might not make sense, but it tends to work for me. Okay, a couple other questions. Larry's asking if I use Marketplex for programming ideas. I think I've been to that site before. I can't recall, but if it has ideas, go for it. And like I said, the key is to modify them and make them your own. And then last question was my favorite time frame. Walter's asking that. I like daily bars for the most part. And so I tend to do most overnight. Ricardo's asking, hey, do I have intraday? I do have some intraday strategies, but intraday strategies tend to be a little tougher to create. So a lot of my strategies tend to last overnight, and they tend to be more swing trading strategies. All right, so that looks like about it. If I didn't get to your questions, I apologize, but we're running out of time here, and I want to get to the book giveaway. So the book giveaway, get ready to type in an answer to a question I'm going to give you, and the people who finish third and fourth with the correct answer will actually get a copy of the book. And okay, so get ready. I wasn't sure if this slide had the actual question, so get ready to type. It's just the third or fourth correct responses to the following question. What are some of the benefits of using a trading platform like TradeStation? Okay, you could stop. We've got, whoa, lots of people answering. So we've got 1, 2, 3, 4. Okay, so we've got, looks like Gypsy and Morgan. Gypsy G and Morgan R. So what I ask you to do is just send me an email, and you can send it to that address that I just typed in, and just tell me you won the book, and you know, I'll just verify you are the right person and send that book off to you no matter where you are. So again, you know, some of the benefits, it's easy to use and learn. A lot of other people use it, so you can trust the results. You know, the platform itself with TradeStation can be free. There's low commissions. It's pretty good. And you can share strategies with other traders. Those are just some of the benefits. You guys mentioned a whole ton more. And I'm sure Don loves seeing all those answers because you know, there's a lot of cool things. And if I counted wrong and you think you're one of the winners, send me an email and I'll take a look at it after we're done here, and I'll, if I counted wrong and I missed you, I'll get you a book too. So, all right. So with that, I guess I'll turn it back over to Don. And again, thanks everyone. Thanks for attending. I appreciate it. Feel free to send me questions, email me. I enjoy talking to people. Like I said, it's a pretty lonely world out there in trading. All right. Thanks, everybody.
Thanks so much, Kevin, for your